Assalamu alaikum. I'm Carl Arundel and you're watching In Focus. It's always a great pleasure to have the opportunity to speak with my guest today, Ismail Ebrahim, the Chief Executive Officer of the renowned and much celebrated UK-based Oasis Crescent, one of the world's leading providers of financial products designed to meet the specific needs of socially responsible investors, including Sharia compliance. Assalamu alaikum, Adam, and welcome to In Focus.
Wa alaikum salam, Carl. Thank you so much.
Now, it's been a few months since we last spoke. I remember, I think, if I'm correct, that we were a little bit overtaken at the time by the standoff between North Korea and the United States. And of course, Brexit was, the crisis was one of the key items on the agenda. Some of that has changed, but not all. But first, I'd like to congratulate you. Congratulate Oasis on winning the Best Islamic Fund Manager Award for 2018 and at the 8th Annual Global Islamic Finance Awards in Sarajevo, Bosnia, and to take this opportunity to recognise your personal achievement with you winning the GIFA Championship Award within the asset management category. Now receiving your award, you had spoken, you said that Oasis's success was underpinned by a simple yet powerful investment philosophy. I'm quoting you. Can you explain to our viewers what that is, and without, of course, giving away some of your own state secrets?
Carl, thank you so much, and thank you for the good wishes. You know, when you get awards, it's really on behalf of organisation. It's on behalf of all the hardworking people and who work in the organisation, and it's on behalf of all the investors who have supported us and shown confidence in our ability to look after their wealth and create wealth over the long term. So our philosophy is really focused, one, on protecting real wealth and then growing real wealth by identifying undervalued opportunities. And if we do that consistently over the long term, and the long term is 20 years and the short term is 5 years, you know, we will create a lot of wealth over time. And we've had the experience of over 21 years of implementing the philosophy of putting the client first, putting needs above wants, and that's very important. So there's an education exercise, you know, because everybody tell you what they want, and we go back and understand what they need. And once we understand, once you've covered what you need, and then you can build from there, and that gives you flexibility.
Now, historically, in financial terms, volatility, uncertainty, these are not good buzzwords for your industry. Although, to be frank, it always seems that you seem to thrive on markets which are rife with both those words. Is that a fair assessment?
Yes. You know, for the untrained and for the momentum, people are going with the flow. They want to see, they may not have the skills, the intellect to choose in tough times. They may not have the conviction to go against the tide, go against the headlines. So when you think about it, when everything is going up, you get very little opportunities to buy great companies, great houses, great properties cheaply. Many of us reminisce, you know, in the recession of this, or somebody bought this house and he paid so little, and look how much it's worth today. Or look how wealthy he is because, one, he worked hard, he was entrepreneurial, and he invested through the down cycle. So what we're doing, or he or she, when I turn, let's be, you know, in a gender neutral he or she way, what happens if you take the uncertainty of economic cycles, if you take the uncertainty of stock market cycles, if you take the uncertainty of interest rate cycles, that creates short-term volatility. Now, I happened to be in London in 1987. I happened to be in London in 1986. I arrived in September 1986. And I spent 18 months in the financial service sector. And what was very interesting, the euphoria of, it was called Big Bang, the deregulation of the financial service sector. There was so much euphoria. And then just a year later, Black Monday, the stock market crashed 19%. And it had a profound effect on me to see people's emotions. And yet, if you look back on the long-term perspective, it's actually very difficult to see Black Monday on the graph. So it's all smoothed out. So on 20, 30, 40 years later, if you ask people about Black Monday, they wouldn't know about it. And so over the long term, volatility smooths itself out.
No, but you will probably have to at least acknowledge that regulation can have a significant impact on your ability to ride those markets. I mean, you operate, your sort of areas of operation are UK, Ireland, South Africa. To what degree is the regulatory framework, the infrastructure, sympathetic to the building of sort of Sharia-based financial operation?
Fantastic. You must remember all three of those countries, Muslims are in a minority, and all three of those countries we've built businesses over the entrepreneurially from the private sector, and the rules have been accommodating, the environment has been accommodating. So we have our operations in those countries, we have the funds registered based in South Africa and Ireland, and for distribution and products in the UK, and then distribution in places like Switzerland and the UAE. Now, all those three countries, the regulatory framework is actually fantastic. It's flexible. We understand it. We like regulation because now doing all, every time there's a new regulation, it creates a lot of additional work, so that's the downside. But the benefit of regulation is it creates a framework, it creates a governance structures, it creates an environment where people know and can trust. So if people can trust the environment and you know what the environment is, as an entrepreneur, you can thrive in that environment. So we're not anti-regulation. Sometimes just moan a little bit about the sheer volume of change because it requires a lot of work, but we comply.
So in that respect, you like certainty?
Certainty, but certainty of operating environment, uncertainty of financial environment, because what that does is, we evaluate every company, every property that we look at. So we'll come up with what we believe is the intrinsic value, the true value. Now, when the stock market puts a price above the true value, we either don't buy, or if we do have, we sell. Because somebody is prepared to pay a premium to the fair value, the intrinsic value, and you know what, let them have it. And we will look for things that are trading significantly below intrinsic value. Now, when you come through an economic cycle, a down cycle, so in an up cycle, many things are, and people feel the effect of wealth in an up cycle because they can see it in the numbers, okay? But that's realizing the wealth, okay? But because you have a long-term 40-year time horizon for your pension, right? You can't actually realize that wealth because if you sell it and, but we in our portfolios can take advantage of it, sell those shares down, have cash. And when you have a situation of an economic downturn, a stock market downturn, or an event like Brexit that creates uncertainty, when you have uncertainty, you get situations where values are below intrinsic value very, very materially. And we get excited when we afforded the opportunity to buy something, some amazing assets, amazing properties, amazing companies at 30, 40, 50% below intrinsic value. Now we know we have a long-term time horizon. Now normally economic cycles and stock market cycles, the down cycle is 1 or 2 years, or sometimes even months, so you've got to react very quickly. An event like Brexit is more like 3 to 5 years. So you've got a 3 to 5 years of a trough that gives you opportunity to buy in. You don't people don't get the feeling of wealth.
Now, you've spoken more conceptually, but look, the buzzwords at the moment are deal or no deal. Will we leave the EU without a deal? And there seems to be a 50-50 likelihood that it could go one way or another. And of course, I'd like to ask you, some have suggested that this could lead to a lengthy UK recession if we end up without a deal. Should we be bothered that Theresa May's promise of an end to austerity failed in effect to materialise with a budget announcement last week, which instead, as some people have suggested, was a tax giveaway for middle class and small companies? And is there any truth to the rumours that we can expect to see major financial institutions suddenly shuffling off to Frankfurt or somewhere else?
You know, let's deal with the last part first. The last part first. The interesting thing is the UK and Paris are the large European cities. The other cities are 1/10 and 1/20 of the UK size. So practically, you couldn't move 50,000 or 100,000 employees with their families, say take 3 people, you couldn't move 300,000 into Frankfurt. There are not enough schools, etc. So I think there will be some movement, but none of those cities, so you'll get a fragmentation, and people are concerned about the fragmentation of the financial service sector, because one of the advantages of London and New York and Tokyo is you have a concentration, you have a framework, you have an environment, it's a catalyst to pull talent in, it's a catalyst of pulling organizations in, and so it lowers the cost of operation. It increases the confidence, the certainty of the outcome, because you've got the framework in place. If you move and fragment the financial service sector, or any sector, you lose that, and you lose all the economies of scale. So the one advantage that London has, because it's such a big city, it's been doing this for hundreds of years. The current budget that's the beginning of a reversal of austerity. Now, if you do get, and they just started, there's a huge scope to reflate, to stimulate the economy fiscally.
But wasn't it premature to start giving tax giveaways to small companies and the
But you talk about, you need to get that confidence, you need to create a competitive environment, you've got great uncertainty, let's start creating the platform, and that's what the flexibility of the economy is. You know, so that when you get, either way, it's a bit of a giveaway, and if you do get a kind of soft Brexit, as they call it, then you have the ability to grow the economy without a lot of support, okay? But if it's a hard Brexit, you can actually reflate. Can you imagine if there was a hard Brexit, the pound is weaker, but you can add 1, 2 or 3% to the GDP through fiscal stimulus that counters the effect of a negative effect, so you get closer equilibrium. So give the Chancellor the benefit of the doubt.
All right, we'll do that for the sake of this conversation. But I'd like to shift to more global markets, the United States. As I said, when we spoke last, we were sitting in the middle of a row between the North Korean premier and Donald Trump, and there were talks of impeaching the president, and all sorts were going on. We don't hear about North Korea anymore, but we still hear about Brexit. Now we've got a trade war with China. You know, the results for midterm elections in America are coming in as we are speaking, but it looks like Donald Trump has lost control of the House of Representatives, although he's retained Congress. How will all this affect markets?
So it has affected markets. So one of the great certainties that there's been great economic order and certainty post-World War II. And that was almost given jet fuel with the opening up of China and the fall of the Berlin Wall. The world became more integrated, there were a lot more people who worked harder. There were a lot more people who consumed. So global trade used to grow at 3 times global GDP over this period. So boosted the global economy. More recently, before the impact of this anti-trade, anti-tariff, anti-people movement, global trade is now just 1 times GDP, the economy. We would anticipate that global trade will now be lower. The growth rate would be lower than global GDP, and it will start slowing global GDP, creates uncertainty. So in the short term, most of that pain has happened in emerging markets like China, because they're exporters. They're the people that are working harder and building positive balances. Now, what has happened? Inflation is starting to pick up, especially wage inflation in the US. Now, you've supported the US economy, which is doing very well, okay, with fiscal stimulus, the wrong thing to do. It's like throwing more fun at a party when the party is really at its peak. And you know what? You overdo that and you get a sore tummy, right? And you now have the trade wars, and you're telling people, bring your production back into the US. The US has the lowest unemployment rate in 40 years. Where are they going to find workers when at the same time they're blocking people coming into the US, blocking borders with Mexico? So you could get massive rise in wages, massive rise in inflation, and I think that's most probably the biggest risk to the world economy, and biggest because what will then mean interest rates will move up very materially. So we think that this heavy party of euphoria that's happening, and it's just go for glory, just throw as much as you can on the fire, and everybody's happy with the warmth. But when that fire goes out, there's no more wood to keep us warm.
A very, very, very pessimistic warning there. But I'd like to just focus on the Sharia financial markets just. I mean, I've read about a recent announcement by Saudi Aramco's IPO, given that the current size of the global Islamic finance industry is estimated to be between about 1.6 and 2.1 trillion dollars. The suggestion was that Saudi Aramco's announcement may shift the valuation up to $10 trillion. Do you understand it? Can you possibly explain what that's about? And is that likely? And what does that mean?
So, firstly, the Islamic finance sector is growing. Firstly, those economies are growing faster than the global economy. Secondly, as organizations become more global, as the distribution and the products become more acceptable in more and more countries, you get economies of scale. And what that does is attracts companies like Saudi Aramco and many others to come to market. It attracts many banks to change their ways and come into the market. It attracts many organizations and many countries to issue sukuks, as the UK, Hong Kong, amongst others, Middle East, Turkey. And so you've got a momentum. Very much like China, when China grew, it grew at a rapid rate, right? And the growth rate was 10%. 10% on a small number over 10 years becomes 10% on a mid-sized number. Another 10 years, it's a bigger number. So the compounding effect of returns and the compounding effect of growth, all of these things leads to a very favorable environment for Islamic finance. And if you look at a country like the UK, Islamic finance for the domestic market is still in its infancy. We've only been around since 2012 in the UK. We've been around 21 years globally. If you look at the Islamic banks, they're growing, but they're small. But the confidence is increasing, the knowledge is increasing. So there's no reason why in 10 years' time it's taken us. It's like a plane going off on the taking off. It takes 10 years to get to speed up on the runway. And once you know what the story is, once you're off the runway, the plane just soars into the sky.
And shall I assume that that confidence uplift is a reflection of the performance of your funds?
Yes, twofold. It's a performance of our funds in an environment that is, very tough. In an environment where we said that, so the global funds are doing really well because economies like the US are doing really well. However, Brexit has created opportunities. We bought a IT, so many of the companies that we're buying, other people want to buy. So I'll give you an example. We had shares in Hughes Net-a-Porter. And Richmond came to buy, we bought it at 21 euros, and it was taken out a year, 18 months later at 38 euros. That's a very, very big increase. We've seen the same with GKN where Melrose did it. And now we're seeing the owner of Trafford Centre into where there's an offer at 40% higher than the low. We own a share in a company called Capco, which owns Covent Garden and Earl's Court. And there's a queue of people wanting to buy Earl's Court. So this is, with my introduction, we're utilizing the period of Brexit, the period of volatility, the period of uncertainty to accumulate wonderful companies, wonderful properties, and when we get the certainty of Brexit, that value will be released. So we're very, very comfortable with the portfolios. We're very, very comfortable with the positioning across the board in the global funds doing really well. The UK buying great companies, and as the certainty of Brexit is known, whichever way, that value will be released.
Well, that very positive forecasting note, Adam Ismail Ebrahim, CEO of Oasis Crescent, it's been a real pleasure. Thank you so much for joining me on Islam Channel.
Carl, it's always a pleasure. And to the viewers, we have to take care of our future. We have to take care of when we retire. When you look at things, you cannot count on the state and you cannot count on friends when you retire. You actually have to look after yourself. So we have many opportunities and all the products in place for you to save generally, for you to save in a tax efficient way, whether it's in an ISA or in a SIP. And I really, really implore all the viewers and our whole community to really start saving. The savings rate in the UK is one of the lowest. Secondly, many people in our community buy homes to lease out, to let out to students. I'm not sure what you've noticed, or you've noticed that house prices in certain areas have come down very dramatically. But many universities and many of the corporates focus on student housing are now putting up brand new student accommodation. So we think that, the last 30, 40 years of individuals providing a cottage for 20 students, so that's not the way to rather, allow us, or you can go buy Unite or whichever company. I'm just using that as an example. So save, be positive, don't worry about volatility, worry about inflation, worry about the fact that you need to save to ensure you have the flexibility to meet your needs, and also ensure that from time to time we have a bit of fun and meet your wants. Thank you so much.
Very wise words. Thank you very much for joining us.
journey. Walk with me, walk with me. This morning I was chilling out in London, oh. Then I ended up in Istanbul. Last night I was in Switzerland. I'm a traveller on these lands. Sitting on a boat going Santander. Cross the border to Morocco, Tangier. Text mom, show me Pakistan. I'm a traveller on these lands. This morning I was chilling out in London, oh. Then I ended up in Istanbul. Last night I was in Switzerland. I'm a traveller on these lands.
Doctors, professionals, community leaders, parents and grandparents, whichever role you're in, you want to get ahead and succeed in it. Oasis Crescent is the wealth manager that can manage your savings in an ethical, sustainable and Sharia-compliant manner. From as little as £100 per month or a one-off lump sum of £1,000, you can begin your journey to reach your financial goals. Contact Oasis today on 0808 238 7543 or visit oasiscrescent.com. Commitment unwavering.
We know accidents can happen anytime, whether it's an injury at work, a slip, trip or a road traffic accident. At Claim 500, we ensure you receive 100% of your compensation. Due to recent changes in law, solicitors are now able to charge up to 25% of your compensation. We don't charge you a single penny, even if your claim is unsuccessful. Call Claim 500 now on 0845 8123 456. Claim 500, helping you bounce back.
You can now order your food via our easy-to-use app. Sign up today and get a surprise gift with your first order. Download your app today. Sergister Brothers, extraordinary gourmet burgers.
Assalamu alaikum. If you're in the UK and looking to invest in a halal manner, you have to listen to this story. Wahed started in the US with an aim to make halal investing accessible. Based in New York City, they reach thousands of clients through a simple and efficient halal investing platform. Whether you're trying to get away, invest for your family's future, or even buy a new home, they're committed to helping you reach your goals. What's even more exciting is that Wahed is now available in the UK. They're looking to help people who want a smart, ethical way to invest their money. All it takes is £100 and a few minutes to get started. Once set up, select your optimized portfolio, add your funds, and monitor your progress whenever you like. Let Wahed help you grow your wealth in a halal manner.